Okay, so let's just start by having a quick look at what has been happening before we move over to looking at the economic calendar with what's been going on. So, I mean, as far as US stocks are concerned, we have seen that they're actually had a relatively flat weekly performance. The US dollar is set to gain 0.5% across the week. And basically, this is because we've had this risk-off environment owing to the conflict in the Middle East between Iran and Israel. So that's been driving those safe haven flows where we've seen caution towards riskier assets such as equities and increased demand for safe havens such as the US dollar and gold, for example. But interestingly, I mean, it's the first sort of, we're still seeing these US dollar safe haven flows for the first time really in a long time, because whilst we've had that focus very much on the US dollar and US tariffs, the US dollar has actually been out of favor, and the market had been looking to safe havens elsewhere. So actually this is again the first time in a while that we're seeing the US dollar behave in its traditional safe haven role, expected to rise 0.5% across the week. Also this week we've had the Federal Reserve rate decision where they left rates unchanged in line with expectations, but we did hear a sort of slightly more hawkish stance from the Federal Reserve after Chair Jerome Powell warned of meaningful inflation to come owing to the trade tariffs and the inflationary pressures that they're expected to bring. We also had the Bank of England interest rate decision last week, and the central bank also left rates unchanged. And they noted that inflation was double-sided, so the risks to inflation were still two-sided, and that's a nod towards the rising oil prices that we're seeing because of the war between Israel and Iran and what that could potentially mean for inflation. But then we've also got that idea of underlying growth in the UK is cooling off quite significantly. I mean, we just look at retail sales, which came out today, which fell 2.7% month on month. So that was quite a sharp decline. So also we had the Bank of Japan meeting last week where they adopted a slightly more dovish tone just with regards to their bond purchases. They're going to taper or slow down the pace at which they're tapering their bond purchases. So a slight dovish mood, which has seen the USD Japanese yen come under pressure. So that's where we are. This is the Nasdaq. As I said, we've seen that obviously that recovery that from those April lows. We're getting up to that 22,000, hovering above the 21,500, seeing some consolidation around this level. Not too far from record highs at all. The buyers are going to be looking to aim above the 22,000 to get that 22,245 all-time high into focus. On the downside, that 21,500 is a fairly solid support that we've seen holding. And below that, you've got the 21,000. Just going to bring up oil because heading into next week, I think, we're going to see obviously the ongoing focus on the Middle East and what's happening as far as the Middle East is concerned, what that means if there's any broadening out. Obviously, as far as oil is concerned, the oil market is really jittery about the Strait of Hormuz. That is that waterway which carries around 20% of the world's oil, seaborne oil. So, I mean, if there is any attempt by Iran to block that strait, then that could send oil prices significantly higher. Goldman Sachs warning of $100 a barrel in such a scenario. Now, this is the chart. We can see that I'm just going to pan out into the weekly chart. We can see we're trading within that falling channel that's been pretty much in place since September 2023. We've just hit the upper bound of that channel with that rise towards that 77.50. The price has eased away. We're still above the 72.50 level, 72 level, which we saw was the high back in April That's the level that sellers will need to break below to potentially to get the RSI, which is very much in overbought territory, out of overbought territory. So, I mean, that could negate at least the near-term uptrend. We've got the 200 SMA down there at 68.90. I mean, it's going to take a move below this level, 66.50. It does feel like oil is still some way off getting back below those levels, given the level of tension that we're seeing, and over whether the US will be getting involved or not. That's something, I mean, Trump has said today that he'll weigh up the decision and he'll let the world decide within the next 2 weeks. Very Trump, in the sense that he's very much keeping the world guessing over what he's doing. And that in itself does create a level of uncertainty. So, I mean, we can have a look at this, just, you know, the volatility that we've seen in oil prices. If the concern is that the US doesn't get involved, that could broaden out the war into the Middle East, raising the likelihood of oil infrastructure being hit. In those cases, a rise above 77.50 going to bring the 80 level into focus, the high we saw in 2025, and above that 84, which is the July 2024 high, comes into play. So that's what we've got going on. Let's just take a quick look at gold whilst we're here. I mean, gold's going to be in focus again anyway, because we do have inflation data again next week. But actually, if we just have a look at the gold price, briefly rose up to that 34.50 level, 3,450, hasn't managed to hold it. So we're now just here testing that 20 SMI, which has been very much holding the price since the 20th of May. So that's a pretty key support level that we're just sort of testing around at the moment at the 33.50. If we get a close below that, I think that would be interesting, could potentially open the door to test the lower bounds of this rising channel around the 3,300 level. That's also a fairly important level over here as well. And then below that, that brings the 3,200 level into focus. If we're finding that tensions ramp up over the weekend, then that 20 SMA could hold, in which case we'll be looking for a move back above the 34.50 today, this week's highs, in order to bring 3,500, the all-time high from April, back into focus. So that's what's been going on over there. Let's just have a look. So I think headlines are going to be very much a key driver across the week. Quite difficult to trade headlines, but you know, we very much saw that was the case this week. Even though we had 3 central bank rate decisions, it was very much headlines that were driving the move over anything else. So this is the calendar for next week. So we kick off on Monday with the PMI data. Now this is going to be interesting. The market's going to be very much watching to see whether we're still seeing that sort of contraction territory for the for Germany with both their manufacturing and their services. Are we still seeing sort of signs of tentative improvements there, so contracting at a slower pace? And also with the Eurozone, we saw the composite PMI was just slightly above that key 50 level, which separates expansion from contraction. So the market's going to be watching closely to see whether we're seeing that PMIs are holding up, especially because these are very timely. So this is the data that we are seeing for June, and we're still in June. So that gives you a sense of how timely the figures are. It's not like GDP data, which can come sort of, you know, months later. But if we get a sense that the impact of Trump's trade tariffs has created sort of a a slowdown as far as consumer spending is concerned, as far as manufacturing is concerned, then we might start to see that showing up in the data, and in which case that could mean weaker than expected figures from the Eurozone. This is the euro US dollar. If we get any weakness in those PMI data, then it could just weigh on the euro. I mean, the euro has still been showing, I think, phenomenal levels of resilience. Given that I think the outlook is relatively weak, but the ECB are expected only to cut rates once more this year. So it does feel like the central bank is towards the end of its rate cutting cycle. Inflation is below target at 1.9% there. So if we get a sort of a slowdown in economic activity, that's obviously going to be a little bit of a concern. But even so, that euro has been holding up as a really viable alternative to the US dollar, as we've seen investors rotate out of the US dollar and into alternative areas. So levels to be watching out for, you've got that 115.75 level on the upside. If we get above that, then we can get towards that 116 level to multi-year highs. The on the downside, levels to be watching, I mean, the 20 SMA is just helping the price higher there. But then you've also got this level here, which is the 114. Below 114, you've got the 113 level to watch as well. Just going to bring in the DAX, because the DAX has fallen away from its all-time high, finding support on that level there, which is the 2300, which is also around the 50 SMA, as we've seen the price really fall quite steadily down from that record high just at the beginning of June. Any sense of weakness in the data, we may see that price just really test that 50 SMA and the 2300 level, which could see expose or fuel, should I say, a deeper sell-off towards potentially the 200 SMA. We've got the 2200 level in between. But if we get upbeat data as far as PMIs are concerned and some encouraging numbers, then 23,400 or 23,365 is a level to be watching on the upside. That was the March high. It was also a level that we've seen so mid-March and late March. Okay, so we've also got UK GDP data as well. We've got UK PMI data. Again, watching out, particularly that manufacturing figure, which was very weak, although the services have been holding up. So we'll be watching out to see whether we're able to see sort of more strength in the services sector, which is questionable given recent data is starting to show some signs of weakness, particularly in wage growth and in sort of consumption. We've seen fall quite sharply as well. Also got Governor Bailey is going to be speaking. Obviously, that comes just a couple of days after the Bank of England interest rate decision this week. So there are questions over how much new information he will be bringing. But then we've also got GDP data quarter on quarter expected to confirm the 0.7%. I think we get the month on month in there for May as well. GDP has been slowing. We've seen signs of the UK economy slowing. Obviously, we had that very strong Q1 start, but since then we're starting to see that things have been slowing quite considerably since, which is in line with what the Bank of England is expecting. This is the pound US dollar trading longer term within this rising channel, but it's looking towards the weaker end of things now. We saw it peak around that 136.25 level, fallen away, tested here the 50 SMA. We're just around this sort of 134.30 level, sorry, 134.50 level, which was the high we saw in April, back in April. So it's almost been a bit of a consolidation pattern here, looking to just sort of try and take out those levels. If we get more concerns, risk aversion, as well as any sense of disappointing data, watch out for below that 134.50 level. That's potentially then going to bring this 133 level into focus. But if we find that actually there is a de-escalation in the Middle East, and we find that we're getting stronger, but slightly stronger than expected PMI data, then we could find that we're able to push higher, especially if there's some US dollar weakness. Then we'll be able to push towards that 135 level. But I think for the time being, this is looking like it may be looking for signs of a reversal. There aren't any signs yet. There are no concrete signs of a reversal yet. We've got that bearish engulfing candle, but that's what I would be looking for there. Just going to bring up the FTSE. This is the FTSE, similar pattern. We're seeing a similar sort of pattern across the board, where we've seen this recovery, impressive recovery from the April lows, hitting, I mean, here it was within a breath of its all-time high at 8,900, and it's just easing lower towards that 8,800 level support. That's what we're seeing it supported, but it does look as if momentum is running out of steam. So levels we're watching on the downside, be looking back towards the 86.50 level as one to be watching out for if we see any more weakness in that pair. If we get upbeat data and we get the escalation, then that could be good news, and potentially a rise above 89.50 could open the door to fresh record highs. So let's have a look. As far as US, tomorrow, US, the main focus is going to be on Federal Reserve Chair Jerome Powell's testimony, two-day testimony before the Senate, and then, or the House, sorry, the House and the Senate. And then we've also got core PCE, which is the Federal Reserve's preferred gauge for inflation. Now that's going to be watched really closely, the core PCE, because we have had this sense that actually inflation hasn't been increasing in the way that the Federal Reserve has warned that it will. We're seeing inflation actually relatively muted given the warnings of trade tariffs, etc. So if we do see a tick up in inflation, I think this could potentially start to unnerve the market. It still may be a little bit early to see inflation push through, especially if companies were just absorbing the price increases from the trade tariffs until we get a little bit more information about reciprocal tariffs, which is supposed to be coming in the coming weeks. The deadline for the reciprocal tariffs is negotiations is July the 8th. So we're expecting to hear a little bit more from Trump before the July 8th deadline. This is the S&P 500. We can see that it had a recovery in a similar position to the charts we've seen in the Nasdaq and the FTSE from that April low, reaching that high there of 60,070 before sort of easing back and consolidating below the 60,000 level. That 60,000 level is proving to be a little bit of a struggle to move meaningfully above. If we can get a close above that before the end of the week, that would be a very encouraging sign. But equally, with the concerns over what might happen in the Middle East, investors might be looking just to book some profits towards the end of the session today. So as far as the testimony from Powell, it does come after the Federal Reserve interest rate decision that we saw this week. So how much fresh information he will be giving remains unclear or unknown, but the market's going to be watching very closely for what Federal Reserve Chair Jerome Powell thinks with regards to Trump's tariffs, the ongoing conflict in the Middle East, and what all that could mean for the US economy and the outlook for rate cuts. Let's just remind ourselves that the Federal Reserve does still see 2 rate cuts before the end of this year, even though they do see a considerable, meaningful increase in inflation coming this way. So levels to be watching out for, as I said, a close above 6,000. That's going to open the door potentially to a rise towards the to the record high of 61.30 and fresh record levels. On the downside, you've got something there, haven't we? 59.25. Looks like there's some support before we come to the 58.75 level, and then below that you've got the 200 SMA. So there are a couple of levels of support on the way down, but momentum has slowed, and we're seeing that momentum has actually fallen compared to where it was. So just in this holding pattern, I would say, until we get a bit more clarity over what's going on as far as the Middle East is concerned and over tariffs. And maybe we'll hear some more from Federal Reserve Chair Jerome Powell. We've looked at gold. We've looked at, so let's have a look at USD, Japanese yen as well. This is the okay, so again, this is very range bound. It is getting towards the upper end of that range though, so this is going to be one that's worth to keep an eye on. As I mentioned, this week we had the Bank of Japan interest rate decision, and as expected, they left rates unchanged at 0.5%, but did adopt a slightly dovish stance as far as slowing its tapering or its bond purchases. So that's had the impact of just weakening the Japanese yen, particularly against the US dollar, which has benefited from safe haven flows this week, which has meant that the pair has recovered from those sort of 142.50 lows that we saw at the beginning of June, and it's recovering up towards that 146 level now. If we can get a rise above that, that's going to create a higher high. And that's then going to bring the focus towards this 48.65 level, which was the level that we saw back in May. On the downside, if we get support is at that 142.50 level, that's where sellers will need to take out in order to be able to extend any losses towards that 140 level. So if we get any sense of weaker than expected inflation from the reading, oops, a daisy, there we go, came in at 3.4% previously, so significantly above the 2% target level, then that could have a slightly hawkish impact on the pair, pulling it lower. Excellent. So I think we have covered off everything. As I said, headlines are likely to continue driving price movements in the coming week, as well as a couple of key data points which will be worth watching. So thank you very much for joining me. I hope you've enjoyed it, and I will see you next week.